Aloha, I'm Stan Cox. I'm the principal broker and strategist with SC Finance Strategies and insurance consultant. But back before I learned what I know now, I was probably much like you in that I knew next to nothing about life insurance and really had no interest in it. So I was a photographer, portrait artist, and I really just wanted to enjoy life. I loved my work and creating family portraits and art photography. To me, life insurance was all about death, and that was a supreme joy kill. Well, the multi-megapixel phone cameras and selfies basically put me out of business, and I got recruited into the insurance business. I still had no real enthusiasm for life insurance until I started to learn about the really powerful advantages that some life insurance products provided. When I became familiar with the deeper intricacies of, in particular, participating whole life, then I really got into it. And now I want to share with you why now I understand that participating whole life is the most intelligent asset you can acquire. First, there are three types of life insurance. Term, which is simply a cheap temporary life insurance designed to benefit the insurance companies. Less than 2% of term policies ever pay out a death benefit, and they have no cash value. Then there's indexed universal life, including IUL, or that is indexed universal. So there's universal life, including IUL, which is tied to a stock index. But with all universal policies, the owner never acquires any equity in the policy, and it is not guaranteed to be permanent, even though it is categorized as permanent life insurance. Finally, there's whole life insurance. Whole life genuinely is permanent and guaranteed, and it's guaranteed to grow cash value, and the owner of whole life does acquire equity in the policy. And there are two types of whole life. One is participating and provided by mutual companies. The other is not participating and provided by stock companies. It's important that you understand the differences I just outlined because it's only the participating type of whole life that I refer to as the most intelligent asset you can acquire. The first reason is, as with any other life insurance, if you die while the policy is in force, your beneficiary will receive the death benefit, which is sure to be at least 3 times the amount of money you paid into the policy. And as Warren Buffett says, if you can buy dollar bills for 80 cents each, that's really a smart thing to do. And it's hard to argue with the Oracle of Omaha, yeah? And buying whole life insurance is like buying dollar bills for just 30 cents each or less. Connected with the first reason there, the benefit that gets paid out is most often tax-free, and that's huge. The reason why I say most often is because if the estate of the insured is worth over $5.2 million, then there is estate tax on the benefit. So it isn't always completely tax-free, but most times it is. The third reason participating whole life is such an intelligent asset is because it is guaranteed to grow cash value. The rest of the reasons are linked to this cash value aspect. But the fact that it does grow cash value and that it is guaranteed to grow with compounding interest, and that guaranteed interest is typically a good deal higher than any savings accounts, is in itself a really smart reason for acquiring participating whole life. And guess what? That cash value growth is tax-free. And with participating whole life, your policy also receives dividends. That's why it's called participating. Policy owners are actually shareholders in the insurance company that provides the policies. And along with the dividends, the total dividend interest is much higher than any savings accounts pay. And because it's not tied to any stocks or market indexes, there's no risk of loss to your cash account. And the growth is compounding and tax-free. Getting more intelligent by the minute, don't you agree? Now, here's something that's very important and very intelligent. All the cash value in your whole life policy is completely protected. Basically, it's invisible to any and everyone except the owner of the policy. That means that no one can touch it except the owner. If you have your other assets frozen, cash in your policy is exempt. If you are garnished to pay some debt, they can't touch your cash value policy. If you get sued, your cash value is exempt. Even if you declare bankruptcy, your cash value is invisible. Now, that's an intelligent asset. On the other hand, the cash value is accessible to the owner of the policy at any time for any reason. The best way to access the cash value is by taking policy loans. But you don't actually take the money from your cash value. No, you get a loan funded by the insurance company. When your policy is with the right company, the loan interest is lower than the dividend interest you receive. And the loan interest is simple, while the dividend interest you're earning is compounding. Now, here's the real genius about that. Again, with the right company, even when you leverage your cash value of the policy loan, all your cash value continues to grow with the full compounding dividend interest. Now, that is a really intelligent way to use OPM, other people's money. So basically, not only are your loans free, but you're actually making a profit on the loan because of the compounding dividend interest. And that, my friend, is the most intelligent way to leverage money and use OPM. Now, my favorite reason for stating that participating whole life is the most intelligent asset you can acquire is that it is the only asset that is properly and fully useful for the infinite banking tax-free cash growth warehouse finance strategy. The previous few reasons I've explained here are what makes infinite banking such a great finance strategy. High compounding dividend interest, liquid tax-free access via low, simple interest policy loans, uninterrupted tax-free compounding growth even when leveraged. But there's more advantages with this strategy because even when you take policy loans, you aren't locked into a contract to repay the loans according to someone else's demands. You determine when and how much to pay back to the loans. Okay, I believe I've made my point about participating whole life being the most intelligent asset you can acquire. I mentioned with the right company a few times here, and with infinite banking, the policy really needs to be designed to maximize the cash value. For the last several years, I've specialized in the infinite banking tax-free cash growth warehouse finance strategy and designing policies for it. I'm a broker, so I'm not locked into any one company. That means whether you're interested in putting the power of infinite banking to work for you, or you just want to get the best life insurance or annuity, I can help you. If you have found this to be helpful, please hit the like button on this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, the link to the application is below. We're here to help. We look forward to helping you. Aloha and mahalo for watching.